All right, so we've got Lemonade's 2023 annual report.
Mm.
And, annual reports can be a little,
Dry.
a little dry.
A little bit.
But this one's got some really interesting stuff about their business.
Yeah, it really does. It does.
So get ready to dive deep as we,
Squeeze out the good stuff.
squeeze out all the juice about their model, their growth,
Yeah.
and even some of the potential bumps in the road they might face.
I like that. Yeah, squeezing out the juice. That's a good one.
It's not your typical corporate snooze fest.
It's not. It's not.
I mean, it feels like they're really inviting you in
Yeah.
to kind of see their journey.
Yeah, their vision, their vulnerabilities, even...
It's pretty cool how they've woven tech into every single part of what they do.
It's really core to their identity.
Yeah.
They're not just using tech to, streamline existing processes. They're really redefining what insurance can be.
Like their AI bots, Maya and Jim.
Oh, yeah.
I mean, they handle most of their sales and even claims processing.
Right.
Like, claims are filed with a bot.
Yep.
And some are paid out in seconds.
Yes, you heard that right. For simple claims, like certain theft claims, AI Jim can assess it all and process the payout in 2 seconds.
That's amazing. I mean, no wonder they've got this incredible customer per employee ratio.
Exactly.
It's way higher than traditional insurance companies.
It's huge, yeah.
Lemonade has 1,600 customers per employee.
Right.
And traditional companies are somewhere between 150 and 450.
Big difference.
So they're tech savvy, for sure.
For sure.
But they're not just about algorithms and automation. They've got this give back program, right?
Yes.
What is that?
So every year, a portion of the premiums that aren't used for claims actually gets donated to nonprofits.
Oh, cool.
And the nonprofits are chosen by Lemonade's own customers.
So it's like built-in social impact.
Yeah.
Giving back to the community
Right.
and their customers get a say.
Yeah, exactly. It's a brilliant way to build trust, create a community around shared values. And it ties directly into their status as a certified B Corporation, too.
Oh, yeah, the B Corp thing.
Uh-huh.
Full disclosure.
Okay.
I didn't know much about B Corp before I read this report.
Understandable.
What's the significance of that certification?
So becoming a B Corp, it's not easy. Companies are assessed on everything.
Mm-hmm.
Environmental impact, employee practices, you name it.
Hmm.
They need to score at least 80 points on this big assessment to even be considered.
Oh, wow.
It's rigorous.
And Lemonade passed with flying colors.
They did.
The report said the assessment is even publicly available on the B Lab's website.
Yeah, transparency is a big deal for them.
It seems like transparency is like a core principle of the whole B Corp movement,
It is, yeah.
holding businesses accountable for their impact on the world.
Right, and for Lemonade, it goes even further than just a certification.
Really?
They're structured as a public benefit corporation.
So that means
That means they're legally required to think about all stakeholders, not just shareholders.
employees,
Employees.
customers,
plus
community.
The community, the environment.
Wow.
Profit's still important, of course,
Yeah.
but it's not the only bottom line.
So we've got this innovative, tech-driven business model, this strong commitment to social impact, and incredible customer growth.
Uh-huh.
Seems like a recipe for success, right?
Well, like any ambitious company, Lemonade faces its share of risks and challenges.
Yeah, true.
And I appreciate how they're so open about it in the report. It's refreshing.
They're not shying away from that.
No.
They're pretty upfront about their history of losses, but they're working on strategies to increase the average premium per customer, right?
Absolutely. Right now, most of their customers are renters who tend to have lower premiums.
Right, makes sense.
And so they're pushing into homeowners, car, even life insurance to shift that balance.
And that's where the Metromile acquisition comes in.
Right. Metromile, they specialize in pay-per-mile car insurance, which is a growing market. And it allows Lemonade to tap into a new customer base
Okay.
and offer a more personalized approach to car insurance.
So growth is happening, but profitability is still a work in progress.
Yeah, exactly.
What are some of the big risks that stood out to you in the report?
Well, their whole model hinges on their AI being effective.
Right.
If their algorithms aren't accurate, it could lead to problems, you
Yeah.
know, like underpriced policies, overpaid claims, even regulatory scrutiny.
Makes sense.
Yeah.
The reliance on reinsurance also stood out to me.
Yeah,
They use it to spread the risk.
right.
But it comes with its own challenges, too.
Of course, there's always counterparty risk. What if a reinsurer can't fulfill their obligations?
Right.
Plus, reinsurance costs can fluctuate, especially with unpredictable weather.
Yeah.
Becoming more common.
And speaking of unpredictable weather,
Right.
climate change was specifically mentioned as a potential risk factor, right?
Yes, both in terms of the types and frequency of claims they might face and potential regulatory changes in response to, climate-related risks.
It's a tough industry.
It is.
And they're very clear in the report about the intense competition they face.
Oh, absolutely.
I mean, they're up against these giant established insurance companies.
With tons of resources and brand recognition.
It's David versus Goliath.
Yeah, especially in areas like car insurance where Lemonade is still relatively new.
Uh-huh. And speaking of car insurance, that move to pay for the Metromile acquisition entirely with Lemonade stock, that seemed pretty daring.
Bold move, for sure.
Yeah.
Shows their confidence.
Yeah.
But it adds a layer of complexity to their financial situation, too.
Uh-huh. And then there's that other financial arrangement that I found interesting, their customer investment agreement with General Catalyst.
Yeah, tell me about it.
It's this unique deal where General Catalyst provides funding specifically for Lemonade sales and marketing
Okay.
in exchange for a fixed return.
Interesting.
The report said it could boost their cash flow significantly, but it's uncharted territory.
Right. Potential benefits, but a bit of a gamble.
It seems like Lemonade's willing to take calculated risks to achieve its goals.
Yeah, I get that sense. They're not afraid to try unconventional approaches.
Makes them interesting.
It does, but also potentially concerning for investors.
For sure. Okay, so we've covered their tech-driven model, their commitment to social impact, their impressive growth, and some of the big hurdles they face. The report also talks about their governance and leadership.
Right, the people steering the ship.
Yeah, always interesting to explore. First up, the co-founders, Daniel Schreiber and Shai Wenninger. What's their background?
Well, Daniel Schreiber, the CEO, he has an interesting mix of experience. He led PowerMat Technologies, a wireless charging company.
Oh.
And before that, he held positions at SanDisk and M-Systems.
That was a solid tech background.
Oh, yeah.
But wait, the report said he also practiced corporate commercial law.
He did earlier in his career.
Wow.
Yeah, that legal experience probably comes in handy in the insurance world.
For sure. Now, what about Shai Wenninger, the president?
That name rings a bell.
Yeah.
He co-founded Fiverr.
Oh, Fiverr.
Yeah, you've probably seen their ads.
Everywhere. Yeah.
And-
So he brings that entrepreneurial spirit and a deep understanding of online platforms.
Right, and prior to Fiverr, he held product and engineering roles at various tech companies.
It's like the perfect pairing.
It is. They've got that tech savvy and business acumen that's so crucial today.
And the report even emphasizes how important they are to the company's future.
It does. It actually says losing either of them could significantly hinder their ability to achieve their strategic objectives.
Wow.
That's pretty strong.
It really shows how key leadership is, especially for a company like this that's disrupting an industry.
Right.
But they've got more than just them at the helm.
Right.
What about their CFO, Tim Bixby?
Tim Bixby. He joined Lemonade in 2017. Before that, he was the CFO of Shutterstock.
Shutterstock.
Yeah, the stock photography platform. And also LivePerson, a provider of online chat solutions.
Okay, so experience with publicly traded companies.
Yeah.
And a background in online platforms.
It seems like there's a theme emerging here.
There is, yeah.
They've got a leadership team with a strong track record in technology, online businesses, and navigating those fast-growing companies.
Like a perfect fit for their overall strategy.
Absolutely, yeah.
Okay, so we've got the co-founders, the CFO. What about the board of directors? We mentioned some notable names earlier, but are there any others worth mentioning?
There are a few. Tom Hutton stands out to me.
Okay.
The founder of Excel Group.
I don't know that one.
They're a major player in the global insurance and reinsurance market.
Oh, wow. So they've got someone on the board with really deep roots in the industry.
They do, yeah.
Yeah, that's interesting.
It's like they're not dismissing the knowledge and experience of the old guard.
Yeah.
They're finding that balance between disrupting and learning from the past.
It's like the best of both worlds.
Right. They're embracing the new technologies and approaches, but they're recognizing the value of that industry expertise.
It's a smart strategy, especially for insurance.
It is.
It's such a complex industry.
Yeah.
So much history.
Right.
Established practices.
It's a good mix.
Yeah, this mix of perspectives is really fascinating.
It is.
It's not just about being tech-driven. They're being thoughtful and strategic
Absolutely.
in how they approach the industry.
That's key.
I think that's a key takeaway here. They're not just charging ahead. They're carefully assembling a team and a strategy That combines innovation with a deep understanding of, how insurance actually works.
Exactly.
Okay, so strong management team, diverse board of directors, this ambitious vision to transform insurance. And let's not forget their commitment to being a certified B Corp.
Oh, yeah. That's a big part of who they are.
It's not just a marketing ploy.
No, it's ingrained in their legal structure as a public benefit corporation.
The report really emphasizes their dedication to balancing profit with purpose.
They're legally obligated to consider the interests of everyone involved, not just the shareholders.
Yeah.
Which can be difficult sometimes.
Yeah.
Lead to some tough choices.
And they acknowledge that in the report,
Yeah.
that social impact focus might impact their financial performance.
It's a trade-off they're willing to make.
I think it's a trend we're seeing across many industries.
It is.
That customers are drawn to companies that align with their values.
Yeah.
And Lemonade's positioning themselves right at the forefront.
Definitely a trend to watch.
Okay, so we've covered their unique model, their impressive growth, the risks they face, their leadership team, their commitment to social impact.
Phew, that's a lot.
It has been a fascinating journey so far.
It has.
But before we move on to the next part of this deep dive, where we really unpack their financial performance, is there anything else that stood out to you in what we've talked about?
One thing that keeps coming back to me is how Lemonade really seems to be blurring the lines of what it means to be an insurance company. The AI, the Give Back program, the B Corp status, it all points to a different approach.
Say they're redefining insurance.
Exactly. That's what makes them so interesting.
Yeah, they're not just playing the game, they're changing the rules.
And that's a bold move.
It is.
It carries both risks and rewards.
For sure.
But as we've seen, they seem to be approaching it all with a combination of innovation, transparency, and a genuine desire to do good.
Yeah, that comes across.
It does. Now, let's get into those financials and see what we can uncover.
Okay, so we've dug into their business model, the tech, the social impact stuff.
Mm-hmm.
Now it's time to get into the nitty-gritty.
Uh-huh.
Let's look at the financials.
Let's peek under the hood, right?
Yeah, exactly.
How the engine's running.
See if there are any warning lights flashing.
Exactly.
And the report is actually really transparent about their financial picture.
It is.
Both the good and the bad.
Which is great, especially for a company that's trying to shake things up in such an established industry.
Yeah, I mean, investors and customers want to see that honesty.
Transparency is key.
So what jumped out at you when we looked at their financial statements?
Well, their revenue growth has been really impressive.
It has.
They've clearly tapped into a market that wants something different.
But they haven't consistently achieved profitability yet, right?
That's right.
Revenue's growing, but they're still spending more than they're making.
Well, rapid growth is expensive.
Yeah.
They're investing a lot in customer acquisition, tech development, new markets.
Yeah, that all makes sense.
Those investments can really cut into profits, especially in the short term.
So they're playing the long game,
It seems like it.
betting that their investments will pay off as they scale.
It's a classic growth strategy.
But it's not without risk.
Definitely not. They need to make sure that growth is sustainable.
Yeah, and that they can actually become profitable eventually.
Absolutely.
Okay, so revenue is important, but what other metrics caught your eye?
Well, their gross loss ratio,
That's that.
it basically tells you how much of their premium is being used to pay out claims and cover related expenses.
So, like, for every dollar they bring in, how much are they paying out?
Exactly. And for 2023, their gross loss ratio was 14%.
Okay, so for every dollar of premium, 14 cents went toward claims and expenses.
Yep. And that's actually higher than the industry average,
Oh, really?
which is usually in the single digits. It suggests their claims experience has been more volatile than traditional insurers.
Why do you think that is?
Well, it could be a few things.
Uh-huh.
Maybe their customer base is different, their underwriting practices are less strict,
Well,
or their AI for claims processing could be causing some inefficiencies.
probably a bit of everything.
Likely, yeah.
But the bottom line is...
That higher loss ratio puts pressure on profitability.
Right.
They've got to find ways to either reduce those claims costs
Right.
or increase their premiums.
And they use reinsurance to offset some of that risk.
They do.
Essentially, they're paying other insurance companies to take on some of their potential losses.
Exactly. It's like spreading the risk.
Right, but there's a cost to that, too, those ceding commissions.
Yep. It can be a significant expense.
It's all a balancing act.
It is.
Finding the right amount of reinsurance, managing the risk, without driving up costs too much.
Exactly. And investors are definitely watching that closely.
For sure. Another metric that caught my eye was their in-force premium.
Or IFT.
Yeah, essentially the total annualized premium of all their active policies.
Good indicator of the revenue-generating power of their customer base.
And their IFP has been growing steadily, right?
It has. It reached over $502 million at the end of 2023.
That's a lot.
It's a healthy sign.
Yeah.
Shows they're attracting and keeping customers.
And they're trying to increase that premium per customer.
They are, which is key for profitability.
Like we talked about earlier, the homeowners, the car, and life insurance, those policies tend to have higher premiums.
Right, more than the renter's insurance they're mostly doing now.
So if they can get people to buy those products,
Yeah, it could make a big difference.
but it also comes with more risk, right?
Of course, homeowners and car insurance, they're more volatile,
Yeah.
more susceptible to big claims, like from natural disasters or car accidents.
Makes sense. So their underwriting practices and risk management strategies are key here.
They are. They've got to price their policies right
Yeah?
and manage that risk exposure.
And the report actually talks about this.
They do. They say that expanding into new products and geographies, it presents a lot of challenges.
They know the risks. They're trying to mitigate them.
It's a journey.
It is.
It requires careful planning and execution.
Okay, so they're growing, they're expanding, but facing challenges along the way.
It's the nature of the business.
What about their overall financial strength? How are they positioned to weather potential storms?
Well, they have a good financial strength rating.
They do.
Yeah, an A, exceptional from Demotech,
Okay, that sounds good.
suggests they have a strong capital base and they're well positioned to meet their obligations.
But I noticed they haven't been reviewed by AM Best.
They haven't.
Isn't that kind of the gold standard in the industry?
It is, and the report says they're not actively pursuing that rating right now.
Why not?
They cite potential implications for their leverage and reinsurance strategy.
Interesting. So they're comfortable with their current approach,
It seems that way.
even if it means not having that top-tier rating.
It shows their independence. They're not afraid to do things their way.
Yeah, they're forging their own path.
Exactly.
We can't talk about financials without mentioning that IBNR
That
figure.
elephant in the room.
It's huge, $95.4 million.
Yeah, that's their estimate for claims that haven't even been filed yet.
It's crazy to think about.
It's a lot of uncertainty.
It really is. I mean, they're using historical data, actuarial models.
Lots of assumptions.
Right. But even with the best models,
There can be surprises.
absolutely, the report even says that.
They acknowledge the uncertainty.
Actual losses could be way higher or way lower than what they're projecting.
Exactly. It's a risky business.
Investors need to understand that.
Lemonade is not for the faint of heart.
All right, so we've got this massive IBNR figure. They're expanding globally. They're investing heavily in growth. And they're trying to stay true to their social impact mission.
It's a lot to juggle.
It is. What about their global expansion? They're not just in the U.S. anymore.
Nope. They're making moves in Europe.
Mm.
They're operating with a pan-European license.
So they're in multiple countries already.
They are. Germany, the Netherlands, France, the UK.
Wow. But that's not easy, right?
It's not. Each country has its own rules.
Yeah.
Its own culture.
Yeah.
Its own competition.
Lemonade has to adapt.
They do. And one of the big hurdles is data privacy.
Oh, right. GDPR.
Yep, the EU's General Data Protection Regulation.
That's pretty strict.
It is strict rules about how companies collect, process, and store personal data.
And big penalties if you don't comply.
Huge penalties.
That's especially relevant for Lemonade since they're all about data analysis and AI.
Right, their whole business model depends on it.
So they have to make sure their practices comply with GDPR.
Absolutely, which can be tricky.
Yeah, always changing.
And they even mention facing specific risks in the UK.
Even after Brexit.
Even after Brexit. Yeah, they've got their own version of GDPR.
So even with a pan-European license, they still have to navigate each country's individual regulations.
It adds another layer of complexity, for sure.
Yeah, it really highlights how important their legal and compliance team must be.
Absolutely. They've got to stay on top of all of that.
Okay, let's shift gears a bit and talk about their leadership team again.
Okay.
We touched on the co-founders and the CFO earlier, but the report gives us some more insight into their backgrounds.
Always good to dig a little deeper.
Yeah, let's start with Daniel Schreiber, the CEO. We know he's got that tech and law background,
Right.
but there are some interesting details about his past roles.
Like his time at PowerMat Technology.
Oh, yeah, the wireless charging company?
Exactly. Seems pretty relevant to Lemonade's approach, wouldn't you say?
Yeah, definitely. Shows he's comfortable with cutting-edge tech.
And before that, he was at SanDisk and M Systems.
The data storage companies.
Yep. That experience is probably really valuable now.
For sure, Lemonade collects a ton of data.
They do, and he understands data security, data management, and how to use it for innovation.
Makes sense.
Yeah.
Now, what about Shai Wininger, the president? We know he co-founded Fiverr.
Right, but before that,
Yeah.
he had product and engineering roles at other tech companies.
So he's not just an entrepreneur.
No.
He actually knows how to build and manage tech products.
Exactly. That combination is really powerful.
Yeah, the vision and the technical know-how.
Essential for a company like Lemonade.
It seems like both co-founders are really comfortable at that intersection of tech and business.
They are, and the report even emphasizes how important they are.
Uh-huh.
It says that losing either of them could really hurt the company.
Wow, that's a big statement.
It is. It shows how much they contribute.
Yeah.
And how hard they'd be to replace.
It's also a reminder that all companies need to think about succession planning.
Especially those with such visionary founders.
Okay, what about Tim Bixby, the CFO? We know he's got experience with public companies,
Right.
but the report goes into more detail about his previous roles.
Yeah, like his
Yeah.
time as CFO of Shutterstock.
The stock photography platform.
Exactly. That experience is probably really helpful now.
Yeah, dealing with investors and all the regulations.
Definitely. And before that, he was the CFO of LivePerson.
LivePerson, what do they do?
They provide online chat solutions.
Ah, okay. So again, that online platform technology theme,
It's everywhere.
they chose a CFO who really understands their business model.
It's smart. Having everyone on the same page is key.
Yeah, especially when it comes to financial strategy.
Absolutely.
Okay, so we've got the executive team, but what about the board of directors?
We mentioned some notable names earlier.
Are there any others worth talking about?
Well, one that stands out is Tom Hutton,
Okay.
the founder of XL Group.
Excel Group, remind me.
They're a big player in global insurance and reinsurance.
Oh, wow. So they've got someone with deep industry experience on their board.
They do.
That's interesting.
It's like they're respecting the old guard while also disrupting it.
Blending the best of both worlds.
Exactly. They're embracing the new stuff,
Uh-huh.
but they're not throwing away the valuable experience.
Yeah, it makes sense. Insurance is such a complex field.
It is. A lot of history and established practices.
This mix of perspectives is fascinating.
It is. They're not just tech-driven.
Yeah.
They're thoughtful and strategic.
They're really trying to be smart about how they approach the industry.
I think that's one of the key takeaways here.
Mhm.
They're not just going in blindly. They're
yeah.
carefully building a team and a strategy
Right.
that combines that innovation
Mhm.
with a deep understanding of how insurance really works.
Okay, so we've got the leadership team, the board of directors,
We've talked about their business model, their growth,
the potential challenges.
and their commitment to being a certified B Corp.
Right, it's a big part of their identity.
It is. It's not just a badge they wear.
It's woven into everything they do.
Exactly.
The report really highlights that dedication
Mm-hmm.
to balancing profit with purpose.
They're legally obligated to consider all stakeholders, not just shareholders.
Right, which can sometimes mean making tough choices.
It can. Choices that might impact their bottom line.
And the report acknowledges that
They do.
they're open about the fact that social impact might affect their financial performance.
They're willing to make that trade-off.
They're betting that in the long run,
Yeah.
customers will be drawn to that.
I think they're right.
It's a trend we're seeing across a lot of industries.
It is, but it's still pretty new in insurance.
Lemonade's a pioneer.
They are. They're showing that you can be profitable and purpose-driven.
So we've covered a lot of ground.
We have.
Explored their business model, their growth, the challenges.
Their leadership, their social impact.
It's been a fascinating journey.
It really has. We're getting a good look at what makes this company tick.
But before we wrap up this deep dive, there's one more piece of the puzzle.
Oh, yeah.
We need to talk about their financial performance.
Let's see what the numbers tell us about their path to profitability.
All right, so what are we looking at here? What gives us the best insights?
Well, one of the most important metrics for any insurance company is their in-force premium, or IFP.
Okay, IFP, and what does that tell us?
It represents the total annualized premium of all their active policies.
So it's like a snapshot of their revenue-generating power.
Exactly. And Lemonade's IFP has been climbing steadily.
That's good, right?
It is, yeah. It reached $502.4 million by the end of 2023.
Wow, that's a big jump.
It is. It shows growth.
Is that growth mostly from new customers, or are they also increasing the average premium per customer?
It's a bit of both, actually.
So their strategy to attract customers with those higher premium policies, like homeowners and car insurance, is working.
It seems to be, yeah.
But those higher premiums also come with more risk, right?
They do. Homeowners and car insurance are more volatile.
Right, more potential for big claims.
Exactly. Things like natural disasters, accidents, theft.
So how are they managing that increased risk?
Well, they use reinsurance, a lot of it.
Right, paying other companies to take on some of that risk.
Exactly, spreading it out.
But that costs money too, those ceding commissions.
It does. It's a balancing act.
Finding that sweet spot between pricing and covering those costs.
And don't forget about the competition.
Oh yeah, it's a tough market out there.
It is. They're up against the big players and all the new startups.
So many companies vying for those customers.
Makes it even harder to achieve profitability.
And speaking of challenges, we can't ignore that massive IBNR figure.
The $95.4 million.
Yeah, that's a lot of money set aside for claims that haven't even been filed yet.
It's a big unknown, and it highlights the uncertainty of the insurance business.
They're using models and data to estimate, but who knows what will actually happen.
Exactly. Actual losses could be much higher or lower.
That's a lot of risk for investors to consider.
It is. Lemonade is a company with a lot of potential, but also a lot of potential volatility.
So given all of that, what does this mean for their path to profitability? Can they actually get there?
That's the question, isn't it?
It is a big one.
They have a lot going for them. Their model, their leadership, their commitment to social impact.
Yeah, and their customer base is growing.
But those challenges are real. That high loss ratio, the reliance on AI, the competition, and that IBNR.
So many factors at play.
It's complex. Only time will tell if their strategy works.
Okay, so for those of us following Lemonade, what should we be paying attention to?
Well, keep an eye on that loss ratio. Can they bring it down?
Okay, what else?
Their premium per customer, is that average premium going up as they move into those higher premium markets? And their customer acquisition costs, can they find more efficient ways to get and keep customers?
So those are the key things to watch.
Those are the big ones. But don't forget about the competitive landscape.
Right. Can they hold their own against the big guys and the startups?
It's a tough fight.
It is. But Lemonade is a company that's willing to shake things up.
They are. They're taking risks, innovating, building something different.
It's a bold vision, and it's going to be interesting to see what happens.
Agreed. They're a company worth watching. Their journey could teach us a lot.
Absolutely. About the future of insurance, technology, and even social impact.
A lot to learn from them.
All right. Well, there you have it. A deep dive into Lemonade's 2023 annual report. We've covered their model, their growth, the risks, the leadership, their financials. Hopefully this has given you a better understanding of this company.
And the complexities of the insurance industry.
It's been great unpacking all of this with you.
It has. Lemonade is a fascinating company. They really make you think.
About what's possible.
Exactly. And that's what it's all about.
So as always, we encourage you to keep exploring, ask questions, and form your own opinions.
The business world is always changing, and companies like Lemonade are leading the charge.
They are. So until next time, keep learning, keep questioning, and keep diving deep.